All right, Tom, I know that it's time to go, an hour and 7 minutes, but what the hell happened to today's price action?
Yeah. So basically, the long and short of it is, don't worry. This is a nice dip to buy. It's not even that much of a dip, right? Let me just take a
Bitcoin's
quick
at
look at it.
64, 65,000.
Yeah, I mean, I'm calling that
88's
a
at
dip just because it dropped so
6.1.
quickly, but it dropped from 69,000 down to a low of 63,000, and now it's bounced around 65. And people go, "Oh my god, that's crazy!" But just keep in mind that 1 week ago, 4 days ago, Bitcoin was at 60,000. So people are just going to overreact on this. It's just a dip. The dollar's going up, and when the dollar goes up, the U.S. dollar goes up in value. The cryptocurrencies, all financial markets suffer, and so I just want to point this out just to mention that when you see all of the cryptocurrencies move at a or the large portion of them move at the same time in the same direction, that generally doesn't mean that anything is wrong with any one of the particular tokens. It has to
Sentiment.
do Well, it has to do with liquidity, the amount of
Oh,
money flowing around the system. And so a large portion of a lot of the cryptocurrencies, there are people who are holding it because they believe fundamentally in the project, but there's a huge amount of people who are holding it because they're speculating on the price. And if I took out a loan, a leverage loan on for $1 million or whatever it is to buy a bunch of cryptocurrencies, and a bunch of people like me did that, and the cryptocurrencies then go against me, it starts dropping. At some point I have to pay the bank will say, "Oh, Tom, your assets are dropping in value. You got to pay back that loan right away." So I got to sell everything right away as fast as possible at a loss, right? And that drops the price down lower, and then someone else gets triggered, and their bank says that you got to give the money, and it goes and goes and goes and goes, and then you have this waterfall moment. And when you see those waterfall moments where in the stock market, often you have like a few months to buy that dip, or maybe a few weeks. In crypto space, sometimes you have a day, sometimes you have a few minutes to buy that dip. So keep watching this space.
because there's other
Uh,
people waiting to buy in. They've been waiting to buy the dip, and as soon as it goes down, and then they want to get
that's
into
right.
it.
They're running good in. So
So you
I
said
like
that.
it. I always feel good when I see a lot of them fall at once. I go, great. It's not unless they pass some law that bans crypto. I go, great. This is just something, a liquidity problem. It'll come back up later.
You sent me a message this morning. You sent us a message this morning about the euro dollar breaking its support. Does that have anything to do with this?
Yes, but I wonder how much I should go into that
Just a
if
little
we're
bit. I mean, people might care.
all right. So I'm just going to show you the chart real quick. Give me 1 second here. Yeah, so switch over to the screen over here. So you'll notice that this is my currency screen, or one of my currency screens. And at the top of the nice squiggly lines all represent a specific country. The green one is United States, and then there's other ones. The red one is Japan, white one is Canada, and so on and so forth. And so what happens if let me zoom this out so you can see a little bit better. You'll notice that the green line is basically the opposite of all the other lines combined. So basically, the United States dollar is the opposite of the other currencies. So when those currencies go up or down, the dollar moves in a different direction. Why is this important? Well, because all the assets are priced in these currencies. You price things in dollars. The other currencies can make your thing more or less valuable. So what happens here is that for the euro, the euro is the main. Let me zoom in here. The euro is the main currency that when this moves, the dollar moves pretty drastically. And there's this pattern. I'll pull it up on our Discord. It'll just be easier. 1 second. So there's this pattern called a head and shoulders pattern that's been developing for a while. A head and shoulders pattern just basically is a way of predicting where the price of something will go. And so over here, this is the US dollar, and this big can you is this visible to you, Peter?
Yes, yes, it is.
So
I mean, I don't know how much detail I'm supposed to see. I can't see the numbers or anything. But
no, don't worry about the numbers, just the shape of it.
yeah.
So this part over here, this big chaotic mess, this part is where COVID was announced, and the it was the world was set on fire, and so the U.S. dollar dropped in value really quickly, and then rose up in value and bounced around for a lot of while because people didn't know: am I going to need dollars? Am I going to get it? What's this dollars going to be worth? I want to sell these dollars and get something else. It was just this crazy thing, and so after that, the value of the dollar, because of the expectations of printing from the Federal Reserve and the American government that they're going to print a bunch of money, that they're going to inflate the currency, the dollar sold off. So basically, if you see the stock market going up, it makes sense that the dollar would be going down because people go, well, I want to sell my dollars, trade my US dollars for the US stock market. So when I do
Mhm.
that, the US stock market goes up and the value of the dollars go down because people don't want the dollars. Well, around the beginning of the year, the dollar sort of stopped going down. And then around May of this year, the dollar started going up. Now it went up and broke this dotted line you see here is what's called the neck of the head and shoulders pattern. Head and shoulders just means that it's the dollar curved over here, it curved down over here, curved out over here, and the shape over here looks like a head and shoulders. You have to imagine this the other way around because it's upside down.
Mhm.
And once the price moved up beyond this line, this dotted line, then we're in a different place. Now, when it does that, it's almost like the head and shoulders is done, and the price wants to go back up to where it was before. It wants to go back up into this middle range over here. And if
Mhm.
that happens, that means more dollars are flowing out of assets and into dollars,
So people
which
are
is what we
cashing out.
saw. We saw the Nasdaq go down, the Dow Jones, the S&P, but also crypto. This is all a symptom. If a bunch of selling happens, boom, the dollar goes up. So that's all we're really seeing. People are for some reason, some portion of the market is saying, I worry about not having dollars in the future, and so I want to sell my assets and buy those dollars right now for whatever reason that it is.
And how does the euro dollar fit into this?
The euro dollar is the opposite of basically if I the chart of the dollar that I showed you, if you flip it upside down, it would be the chart of the euro. And so currency is only
That's right.
valuable.
You said they're inversely correlated, right? Is that it?
That's right. Because you could only value a currency relative to I mean, in a given population, could be relative to what you can buy, but it's judged relative to other currencies. And so the euro and the U.S. dollar are constantly fighting against each other for as a in a relative way. And so what the United States does with their financial system affects the dollar, but also what the European Union does with their money affects the dollar. And both the US and the European Union want their currency to go down for a number of different reasons. They don't want their currency to go up. They want it to go down. And so right now it looks like the euro is winning. They're going down more than the United States can. Again, for lots of reasons that are very very interesting to me, and we could talk about it in later videos. But this supports my claim that there is a not my claim, it's a claim that I've learned from Jeff Snyder and other people that there's a dollar shortage in the world. There's not enough money moving around. We mentioned this before that wealth is generated by money moving around, not by it being hoarded and saved or siloed. And when there are bottlenecks of money, or there's a lot of money over here, but not a lot of money over there, right? It causes instability within a given population. That's why you're seeing companies in the United States with record profits and workers barely able to make ends meet. There's not enough money flowing around. And my contention is that cryptocurrencies is again, not my contention. I'm telling you right now, things I've learned from other people that cryptocurrencies have come up as a response to that. That when people can't find enough money to go around, they'll create something else
Hmm.
to go around. It's called ghost money. They'll create some other thing to trade in order because people need to trade in order to be able to store some value and trade it for time and energy later on. So you need to do something. And if the currency you're using is not good, you'll use something else. And so I think one of the reasons cryptocurrencies are going up in value is because there's not enough dollars. And the mainstream reason why cryptocurrencies are going up, they're saying is because they're printing too many dollars, that it causes inflation. And so that is also making cryptocurrencies go up. So I go, this is great. If the real reason that it's the cryptocurrencies are going up is that there's not enough dollars, great, I'm right. And if it turns out that if it's because of inflation that they go up, amazing. It's like a no-brainer bet. Of course, you got to buy Bitcoin and different cryptocurrencies. So I just want to mention that because when you see a bunch of cryptocurrencies go down, check to see what's going on with the dollar. It's DXY. You can just Google that, and the chart will pop up right on Google as to what's the price of the dollar right now.
It's funny. I look at my trading view all the time, and whenever I see a bunch of things happening, I know something has happened in the world, and I message Tom or call Tom. I go, "Hey, what's the news? Like, what's going on?" It's cool to have this sort of trigger of what's happening. Sometimes I look at it, it's all red. I go, "What happened?" Biden just gave an announcement. Oh, I gotta something's happening. So it's a good way to kind of keep your finger on the pulse. So, a lot of people might find finance stuff boring, whatever. I don't have the head for it like Tom does, that's for sure. But just a little that I know gives me a window into the world, and some insight that I wouldn't have had before. And so exciting, so interesting. You guys are so awesome. Thank you so much for watching this live or after the fact. Thank you to all our subscribers and all our patrons. We really appreciate it. Thank you everybody who comments. I read them all. Thank you so much. Thank you for your time. Your attention matters, and you matter. And that's what Happy for Change is all about. Giving your attention to great ideas to empower you to make your life better, because it makes everyone's life better. My name is Peter Hartman,
I'm Tom Hartman.
and you're watching Jumpstart Live.
Jumpstart Live.
Take care, everyone.